Good morning, everyone. It's now 8:01 Pacific time. As you know, we're a global company, so apologies to all of those on the West Coast, although I know we all get up very, very early, but we're trying to accommodate the global time zone, so apologies. However, it's my absolute pleasure to invite all of you, and so glad you could come today for the Spotlight series. Today we have Philip Hoffman, who is the global CEO of the Fine Art Group. Philip, do you want to introduce yourself?
Yeah, spent 32 years in the art industry, 22 years running the Fine Art Group, and had the pleasure of working with some amazing families across 28 countries, everything from advisory to investment to art financing to valuation appraisals and to art agencies. So an interesting and global business, and excited to talk to everybody today for 19 minutes now.
Yes, and the Fine Art Group, if you don't know about us, we're the largest globally vertically integrated firm, meaning that everything is in-house. So we have a very large appraisal business. We assist clients with sale, acquisition, lending, if they need to lend against their art or their jewelry. We're obviously have a long history of investment, and that is specifically why I wanted to have this conversation with Philip today. And let's not forget, we have a strong high profile division and are very focused on philanthropy. So we're a very, very busy company, but we're always aligned with our clients, and that's the main focus. So today, I thought this would be a great opportunity to have a conversation with Philip. As you know, many of you know, Philip has been in the art industry, as he says, for 32 years, but specifically in investment. And with our current state of the economy, I thought it made a lot of sense for us to have a conversation. So at the end of this talk today, we will have 5 key takeaways that you can use to deploy in when you're thinking about your own art collection or building an art collection. So let's get started, 18 minutes and counting. So Philip, the current state of the economy today, are you afraid? What are your thoughts around the current state of the economy? I know we're all looking at it very carefully.
Look, our clients have commented to me, you know, we have clients all over the world. DAX are down 18%. The S&P is down 500, is down 20%. The FTSE in London down 10%, which is where I am. The Hang Seng in Hong Kong, and I was talking to clients there this morning, minus 12% since the beginning of the year. And the NASDAQ, many of those went into tech stocks, minus 27%. So that's backdrop number one. Backdrop number two, which probably scares a lot of people off, is inflation. UK inflation at 9%, US inflation 9%, Hong Kong inflation modestly low at 2%. So everyone's asking what's going to happen to the art market and what has happened to the art market, and we'll cover that in a moment. But it's an interesting sort of fear factor of everybody saying, well, it's got to go down.
Yeah, and I know coming out of COVID, a lot of our clients are heavy in cash, correct?
A lot pulled out, a lot are trying to recoup their losses, but a lot are looking at the different ways of what to do and what alternative assets to put their money into.
Okay, so let's, as a backdrop to the economy that we're all thinking about, and I feel like I'm in a time zone going back to 2009, when again, we all thought the world was absolutely coming to the end. But let's talk about the art market, because while we've seen kind of a continual kind of decline in the economy, the art market seems to be booming. So based on what we've just seen in May and looking in London, what are your thoughts? Where are we with the art market currently?
Well, in the first half of the year, Sotheby's, Christie's, Phillips and Bonhams had record 6 months. You wouldn't know there was any recession in the art market for the past 6 months. There were the odd hiccups. A couple of Basquiat's didn't sell, thinner buying, but you know, Christie's up 18%, Phillips up 30%, private sales slightly down, but as expected, people were switching to auction. So it looks very glamorous on the outside, but I'll touch on some of our thoughts in a moment. In general, I think 2022 second half is going to be actually more interesting than people think. And I think that there are going to be some blockbuster sales coming out of the woodwork. And like we saw with Maclo and Bass and the Jacobs sale in the first half of the year, which all sailed away 20 to 50 to 100% above the estimates, I think we'll have some repeat performances, but not across the whole art market. It's going to be very segmented, and it's going to be very much deal by deal and collection by collection, which is why advice and insights essential.
Well, I know there are a couple very serious sales. One in particular I know is coming right up against the horizon that we're all really looking forward to. And I know the key to a lot of the big numbers was the quality. But we also saw a huge jump in artists that, did not have a huge track record. And that's an interesting window into, next gen buying, speculative buying, what we call the young contemporary.
Yeah, and I've got clients coming to me and saying, look, we'd like to own the next Anna Weyand, up from 40,000 to 1.4 million in each of Sotheby's, Christie's and Phillips in the last month. So, a very easy way to make $1.36 million in a couple of years. I wish I'd had that foresight, but actually, a lot of clients want to buy art from the young contemporary, but that's going to be a long wait. That they're not going to be that many exciting surprises. And if I was going into the art market with 5 or 10 million, or even $500,000 to $1 million, I would be very cautious on that front. But we'll touch on that in a moment.
Now, listen, we've just seen the Hong Kong sales. Are we concerned about what's happening in Asia? Obviously, since 2010, the Far East has been had a huge impact on the market overall. Are we concerned?
Hong Kong was down about 30% in May, which was a little bit surprising, but inevitable with restrictions on travel. I think it's getting better in that 1 week is a requirement of is quarantine in Hong Kong and in China. I think that they will come back with a vengeance, but I'm not sure that right now is when they're going to come back. So there's going to be no lack of buying from Asia. And in fact, Christie and Sotheby's are setting up new huge sale rooms with impressive developments there. So everyone's committed. We're going to be very committed in that area. So it's very, very important. But number one comes America in the stats for buying. Number two, ironically, the UK was in there as a center of the art market. And number three was Hong Kong and Asia, which is a reversal because Hong Kong came in as number two before.
Okay, let's go back in time. So as we're looking at the past and how artists performed against, economic instability, take us through some of your thoughts there. Give some examples.
Well, I've run investment funds through from 2004 to 2020. And I'll just give you our stats, which are now, printable and I think quite interesting. Average IRR, 14%. Number of successful deals, 88% made money. 12% we lost money. The period of holding, 18 years. The amount we invested, the period that we actually invested over was 18 years. We didn't hold for, the average holding period was 4 years. The amount we were investing, about just under 200 million, and the number of investments, 167. So, 12 to 14%, I think, can be achieved. British Rail, in an era of inflationary moments, where inflation went from sort of 3 to 17% between 1974 and 1987, generated with their art and collectibles funds, they generated 13% return over that 13-year period. Inflation was averaging probably around the 10 level, although it ranged from sort of 3 to 17, and the S&P 500 produced around 12% return. So I think art's a very interesting alternative at this time. And what's another interesting anecdote is in 2008, we first of all saw the day of Lehman's collapsing, the Damien Hirst sale made 100 million at Sotheby's, which was a new single owner world record for a single living artist. The day after, everybody thought the world was collapsing. The art market froze for about 12 to 14 months. But in February 2010, so 14 months later, Giacometti Walking Man sold to Lily Safra against an estimate of 12 to 16 million for 104 million. So the stock market took 2 more years to recover. The art market recovered in 14 months. What I can give you as anecdotally is we invested about 5 million in Christopher Wool. 2006, we paid 400,000 each. 2007, 800,000 each. And 2009, one traded in the market, not ours, at 400,000. So technically, on the 5 million we invested, we're probably down 30 to 50%. I held on until 2000, at 10, 11, 12, and we came out at above $1 million each. So it's a matter of these prime assets, these very interesting works of art where you go for blue chip, we'll talk about that in a moment, have ridden out well against inflation and very well against these economic downturns. But it's not going to be a quick gain in 12 months.
So let's talk about other assets, because I think it's the elephant in the room. Besides art, are we looking at other luxury assets as really, again, we've seen huge growth in that market. So what are some of those other assets that would potentially be a good hedge?
I think, a lot of clients, if they've got the funds, and that requires hefty funds, they're looking at colored diamonds, the blue and pink diamonds, but obviously that's very high end. They're looking at Rolex and Patek Philippe watches. That's gone through the roof over the past 2 or 3 years, and there's still masses of interest. It's, the ticket price is $250,000 to $1.5 million per watch. But there are huge numbers of collectors, and it's totally global. There's a lot, most of the interest is focused on the contemporary and modern market. I would say the artists from post the 60s. But it's definitely not all, you had a request, Anita, for a violin at price levels, up at above 10 million.
Yeah. So, I think it's a good window into our lending business. In fact, the fact that we're looking to watches and jewelry also as assets that we lend against because of our trust in that asset class, correct?
Yeah. No, I think that you've got to look at the balance of investments and where you are in the art market. And we'll talk about that in a moment.
Okay. So let's say you have money in the bank. You're worried about the economy, you'd like to invest in an artwork. Let's talk about what are those categories of analysis that one needs to determine whether an artwork is in fact blue chip, whether or not it's an asset or it's just speculative.
I think that I'd recommend most of our clients, getting very good advice and doing their homework. Too many of our clients, before they came to us, just bought without thinking they knew it themselves, or took rather impartial advice, or rather partial advice. But what I think is really interesting is that the key area to get involved in is in looking at getting the due diligence right, thinking about investing in art or collectibles at around the $250,000 to $5 million level. Thinking about where would you buy your art? Right now, I think what's very interesting is buying in London or Europe, where the pound and the euro are down by 20% against the dollar. So for those of you who are US dollar currency based, or Hong Kong, the UK or Europe is a very interesting place to buy for blue chip art, not necessarily regional art. So if suddenly people say, should I be buying Spanish contemporary art or young British contemporary? If you're high risk focus, yes. If you want long-term investments, I would focus on blue chip art, do your homework, get some advice, and look in those areas. And I think there's going to be some distressed selling. I think interest rates are getting to the stage where they're a little bit worrying, and people are thinking, should I hold on to this asset or sell? So there are a number of questions, but maybe Anita, what would you think?
It's very simple. We do this for clients all the time. We have a huge advisory business. So essentially we look at the way you would look at a piece of real estate, or you'd look at a stock or an investment. We look at 9 categories of analysis. And, I just got an email from one of my clients yesterday saying, I have a friend, they want to invest. Can you name an artist? If it was that simple, we'd all be billionaires. So essentially, one needs to look at who the artist is. Does the artist sell in the marketplace? Is it the correct medium? What's the provenance? How rare is it? Has it sold in the market before? What's the size? So all of these components, we basically look at from A to F. We grade it. And we want all of our clients to acquire artworks that we consider A grade, and within each of those categories of analysis, because honestly, 1D next to one of those categories of analysis can destroy the value. So it's a very specific exercise, and it requires a lot of due diligence. Now, Philip, let's talk about different investment structures, because obviously, let's say you're a client, you think this is a good idea. How do you determine what investment structure to use? What's the landscape like for investment currently today?
So, there are 4 or 5 ways of buying art and investing. So some people who've got the funds like to buy their own art, either in a private account. So we run some private accounts for people, and they start from $1 million, go up to 100 million. People might want to fractionalize and own a share. So like owning a share of a racehorse. So it's possible to own a share of an artwork. And typically, we would look at doing something like that in the US for 3 or 4 clients at the very top end, $1 million each. Then there's the sort of retail environment where there's fractionalization of art where hundreds of people go into it. But the costs, beware, the costs can be enormous. So I'm a little bit wary about that side of things. And then, there's going into an investment fund where you own a share. And again, look at the fees, look at the costs. But I've seen funds where you can get reasonable returns. But my view is that get some good advisors and help you look at all the options.
Yep, absolutely. Now, let's say you have a collection. You're looking at this economic environment. The values have actually gone up. What do you do? Are there any options for you in this kind of environment? Should you sell? What are your options?
I think you need an audit of your collection first, whether you should sell or not. And it depends category by category, artist by artist. So one shop doesn't fit all. You can't necessarily say now's the best time to sell your Basquiat. Now Picasso is right. Depends which one. If you've just seen 5 Rothkos on the market and you're thinking of selling yours, the market may say, look, all the buyers have been satisfied with acquiring what they've really dreamed about. And so now is not the right time because you're not going to get the right price. So it going through it one by one is not an easy answer.
So I would say, certainly we have an issue of capital gains in the United States. So if you have a collection, let's say you have a piece that's gone up in value from the cost basis significantly, and you're thinking to yourself, well, if I sell, there'll be huge capital gains. I guess in order to gain some liquidity, let's say there's a distressed business you want to buy. Let's say you want to buy into the S&P a lot, heavily. What can you do if you have a work of art that's gone up in value?
I mean, a very, very easy answer is to borrow money against art, and you can borrow at mid-single digits, and you can borrow from 1, 2, 3 years, something the Fine Art Group do, and it's very easy. It takes all of a week or 2 weeks to organize, and that's what a lot of clients are doing for short to medium-term liquidity, either to fund an acquisition or to fund, unfortunately, an IRS tax bill, or to fund more acquisitions of art where they see an opportunity. And I think we will see some interesting opportunities in the art market in November 2022.
Okay. Now, last thing I'd say, certainly from a capital gains perspective, if you've had significant losses, and again, we're not accountants, well, of course you were accountant, but we can't give accounting advice. But certainly if you've seen that scenario, I imagine that would allow you to offset some of your losses in other areas of your portfolio. If you sell the art that's gone up in value, that could be an absolute good economic decision as well, correct?
Absolutely. I mean, I think if you've got things that you really don't want to hold on to, and perhaps aren't going anywhere, and there are lots of the art market which have not risen. I mean, Old Master's been a tough market. 19th century furniture, and other furniture areas. What some of our clients are doing is using their capital losses by selling and offsetting it against the capital gains. And I think it's an interesting time to do that.
Okay, so last but not least, let's do our 5 takeaways for today. So these are the takeaways if you are thinking about your collection or potential collection in relationship to the current economic environment. So first, the audit. When we say audit, what we mean is that you have to understand the current fair market value of your collection, which is your portfolio value. And the way to do that is understand cost basis and then compare it with the current market. Once you have that understanding, then a strategy is very, very easy to develop. Should you sell? Should you hold? Just like you would any other asset. The second takeaway is if your collection has gone up in value, and Philip just opined on that, obviously, correct?
Yeah. No, and I think there are some interesting opportunities. to sell if you've got the right objects, or B, take a loan and hold on if you need the liquidity, or C, look, one of the things I think will be interesting would be to use cash that you might have to buy opportunistically in London or Europe for blue chip objects, not just regional, but I'm emphasizing if there's a great Magritte, there's a fabulous Basquiat, a wonderful Rouchet in London. Those sort of artists, interesting to watch.
Yeah, and so number 3 would be take the opportunity of the current economy to acquire the correct artworks, because we do think there are going to be some excellent opportunities in the market, less people buying, very good supply, and if you have money in your pocket. Now, is there a price point that you would recommend for our takeaway for buying this fall?
When we're buying, I'm looking at $250,000 to $5 million. Liquidity, that's where the liquidity is. Above $5 million, there are very few buyers. It really the air gets thin. Below 250,000, I would say that it's highly risky. It's quite volatile. Often the artists aren't that established, or the artworks. So I focus on quality. I focus on rarity. I'd be very careful to be taken in by the sales pitch that's going on. But I do think that we found some great opportunity in 2009, 2010. There weren't as many as you thought, but most of the assets we held on to came out that were blue chip, came out really well. Some of the artworks that we thought were opportunistic, venture capital, like Chinese contemporary, Middle Eastern contemporary art, they were a bit more of a nightmare. And in retrospect, if you don't understand what you're doing and not got really good expertise, don't touch it. That's the number one lesson.
Yeah. And then obviously to do your homework, find the right advisors, find the intelligence, so that you, like you would with any other asset class, right? Bring in the smartest people in the room to assist you with acquiring the correct objects at the correct price. And that would be do your homework. And last but not least, stick to blue chip. Tried and true. During this period of economic instability, you want the artists that have changed the way we look at art history, right? You want an A quality work looking at all those 9 categories of analysis. And last but not least, there are other assets to look at. Look at jewelry opportunities, look at watch opportunities, and other assets of the highest quality possible. And with that, we are at our 20 minutes. And Philip, thank you so much for joining today. I'm so glad we could have this conversation. And thank you all for joining.
Excellent. Thank you very much. I think it's not all doom and gloom. There are going to be some interesting opportunities, but it's not going to be as easy as it has been for the last 5 years, as everyone's seen in the stock market.
Yes, and thank you everyone for joining. We'll have a recording sent out with our takeaways. Thank you, Elizabeth.
Thank you very much. Bye.
Bye, everyone.